My story that really caught me this year was Cathie Wood, and you might be wondering why that's the case. She's kind of been out of the news a little bit lately. And certainly the ARK stuff started going down last year. This isn't a 2022 unique story. The reason it's kind of caught up to me now is that it's only in 2022 that it's really become what you might call a kind of underperforming thing on a 5-year basis. So Cathie Wood has been breaking investing rules this year. Rule breaker investing is a thing that we quite like on this show, but one of the rules of investing is don't fight the Fed, and Cathie Wood has been fighting the Fed, and it's been showing up in the returns on ARK, the flagship ARK Innovation portfolio. So that's down 68% year to date. The S&P is down 20%. Berkshire Hathaway, just for comparison, as a thing I like, is up by 1%. But Cathie Wood always says, look, don't judge us on an individual year, and we will underperform in a bear market, fair enough. And she looks for a 5-year time horizon, so let's think about how it's done over the last 5 years then. It's down 16.29% on a 5-year basis. The S&P is up 43%, Berkshire is up 53%. And back since inception in 2014, these are slightly rough numbers because I don't have the exact date of ARK's inception to compare it to the S&P with, but roughly speaking, ARK is up 55%, the S&P is up 160%, is up 90%, sorry, and Berkshire's up 160. So it's this year that ARK has really become a lagging thing on a long-term basis, and anyone who is invested in a Cathie Wood fund really ought to have been signed on to the idea that, yes, any fund can have a bad year. We will have bad years when interest rates rise. We will tend to win over time. And what I kind of took from this is that, look, the ARK stuff really blew the lid off the stock market. It went pretty much vertical a couple of years ago. And there was a good part of me that was thinking in the learning process along the way, okay, look, this is going to come down. It's not going to stay up there forever. But exactly how much is it going to come down? It's still going to be a winner when it comes down, right? But as far as it went up, it's come down and further, which I guess is a lesson for me to say to myself, well, it's never the case that these kind of gains are secure. I think, okay, you lose 10%, you're still up, 100 and something percent? You take that, a back step like that. But it's gone all the way back here, and I'm trying to work out what's gone wrong, and it's largely, speaking from what I can see of it, a combination of leaning into things that aren't winning, and a combination of, I guess, what you can only call bad macroeconomic forecasting. So I was listening to an interview with Cathie last year where she said everyone was getting interest rate rises wrong. I got them wrong too, by the way, more on that next week. But what she was thinking was there would be one interest rate rise in March, and that would take interest rates to about 0.5 by the end of the year. They're actually at 4.5 at the moment in the States, and that's been absolutely crushing the stuff from ARK and its things. So what else do I take from this? Well, ARK is basically what it is, which is to say it's a sector ETF. If you like speculative tech, you should go and buy ARK stuff. If you don't like speculative tech, you shouldn't go and buy ARK stuff. That's pretty much all there is to it. I think there's nothing more deep or more insightful than that, and it will do well when speculative tech does well, and it will do badly when speculative tech does badly. There's a guy who runs a short ARK ETF who basically decided that, look, he wanted to build that as a hedge against the stock market in general, because suppose you have a pessimistic outlook on the market in general. How can you manifest that? You can be short the S&P, you can be short the Nasdaq, but what are you mainly short there? Well, you're mainly short Apple and Microsoft and Google and Amazon and those sorts of things. It's not always a good idea to be short those because they operate quite defensively in a lot of cases. People run into those when they get scared. Much better, he was thinking, to be short stuff like Zoom and Teladoc and Roku and whatever else. They're going to get really pounded. So if you think the market's going down, get yourself short that thing. And he said, look, there's nothing at all the matter with what Cathie Wood does. The praise she was getting a couple of years ago was madly overdone for buying a load of speculative tech at what happened to be a good time for speculative tech. But also the criticism that she gets is highly unfair as well. It's basically like, he said, buying a utilities fund and complaining that it's gone down when all the utilities have gone down. Of course it is, that's what it does. It's a sector bet thing. Nothing more, nothing less. To my mind, since it's Christmas on this, I would finish with a nice Bible quote for you. So Ecclesiastes chapter 3 says, like everything, there is a time for these things and a time for not these things. Basically, that's the case with ARK at the moment. It's kind of had a time for it, and no doubt that time will come again. Cathie Wood is telling you it will come again next year, which is sort of weird for someone with a 5-year time horizon. But it's currently not been the time for these things, and I think the lesson I take from it is don't underestimate how bad things can go for something that's gone very, very well.
This is going to be... We're going to beat the same drum here. I personally feel the reason why ARK did so well in that first year is because Tesla did very, very well, and she managed to pick a good forerunner, and that allowed her to spew a load of buzzwords out to people with a lot of liquidity, a lot of money, and get them on this massive media train. And that is basically what she did. Fair enough, she had a little bit of clout with Tesla. She did very, very well. Even in the earlier parts of ARK coming to the forefront, she had already done very, very well in Tesla. And she was on CNBC saying, this is that, this is going to be the next biggest thing. Chamath was doing exactly the same thing. But if I read on the front page of another company that they're innovative, that they're disruptive, I am gonna absolutely shit myself, because it's on everything now. It's on Rio Tinto's freaking front page of the website. All of the miners. It's on all the healthcare stocks. It was the buzzword of 2020 and 2021, and unfortunately, everyone got caught up in it again, and this is what we're seeing now. And I think even on my next one, it's going to be a pretty similar story.
It's very much been a year for the people who think things are mainly going to stay the same, isn't it? So crypto hasn't disrupted the way finance works. ARK's companies haven't disrupted anything significantly this year, or indeed the disruptive effect they've had seems to have fallen back in terms of market caps and share prices and so on. Very much a case for those who think, things are harder to disrupt than maybe we thought they were 2 years ago.
See, I think this portfolio has had a lot of quality drained out of it. Whereas before you was looking at this portfolio and the top sort of 5 to 8 companies, you'd think like, oh, they're pretty good companies, and sometimes they were even massively overvalued. I mean, they all became it at some point. But I think Tesla, Square at one point, CRISPR, and Teladoc all did pretty well for Cathy up to a certain point. So she did look really golden at one point, because essentially 4 of her biggest stocks were doing really, really well. But it became apparent, for me at least, in the middle of last year, that this just isn't a time to be buying something that doesn't have an earnings multiple or some free cash flow, or at least even can get to that kind of, could push for that kind of, to show the ability to generate some kind of modicum of profitability. And that's the problem I think I see with ARK's portfolio now, is that she's moved away from the companies that were maybe on the cusp of profitability, or could have been profitable, or maybe even were profitable. And she's doubled down on the sort of companies that aren't profitable and aren't pushing towards profitability. I'm looking at this top 10 now in this ARK list, and we've got Zoom, which I guess is profitable, but it feels like a pretty uninspiring company. I feel like I've had enough of Zoom for like the rest of a lifetime. It's like Skype to me now, like something I will never turn on. Exact Sciences, yeah. Tesla has actually gone from a 10% weight to 6.4, but I think that was all Tesla's doing. And then we've got things like Roku, Block, UiPath, Shopify, Teladoc, Beam Therapeutics, and CRISPR, all of which have not very profitable. I think Teladoc is on the cusp of profitability. Roku has been profitable, but it seems to be slipping away. Their revenue growth next year is going to be...
It's got nothing disruptive happening for it right now.
Well, maybe Roku's connected TV advertising could be disruptive, but is it something that you want to put 6.5% of your portfolio in? I would argue not. And then this seems like Shopify, which to me, Shopify is not a disruptive company. It's just a website building company. Whether you or not you think that's disruptive or not, Cathy's got about 5% of the ARK portfolio in it. So I don't know. I feel like there's been a huge draining of coin. Look, I don't want to pick on Cathy, because I feel like that's all that happens. But then this is the wrong time to be looking at Cathy and saying, like, let's judge her portfolio, I think, because, you've just had that huge spike to the left, and now we're at the doldrums, when the market's in the doldrums as well. It's, the Nasdaq's nearly had a correction in December, never mind, the year before, where it almost certainly has. It's probably the wrong time to take the mick out of Cathy, but on the flip side, she doesn't really help herself. She goes on to, like, TV saying, like, well, it's 40% returns from now, and they give those like really inane predictions, and then they come out with that. I mean, did you see that ridiculous like EBITDA, how we calculate EBITDA? press release
yeah,
we put out,
they
and it was
basically
like adjusted, and they were just like, well, basically what we do is we take EBITDA and we keep adding things back in until it's profitable,
Yeah.
and then we say that company's profitable. Like, that's not how you work it out. You can't adjust EBITDA like that. That's just doesn't, like, EBITDA is a bullshit metric as it is before you start like trying to like feed extra things in to make it look better. So I think she doesn't help herself. I would still bet from here that Cathy can actually improve this portfolio, but I mean, I wouldn't put my money there, is what I'm saying. I could tell you in my head that I think they could probably do better from here, but I wouldn't back it to do it.
You wouldn't, Steve, no, but do you think anyone else has been? I mean, if I asked you to guess, say, the amount of inflows or outflows from the ARK fund, this year, what would you think?
Well, sadly, I know the answer to this, Steve, and I think it's about $1.5 billion of net inflows that has happened to the ARK funds.
Yeah, very good. It's touch
It's all
over that,
retail, though, isn't it? I read it was all real retail, though, wasn't it?
Yeah, that's my understanding.
Almost certainly, yes. I was trying to work out why that's the case, and I have a sort of optimistic explanation and a pessimistic explanation. My optimistic explanation is people are realising you should buy this stuff when it's cheap, not when it was 2 years ago and trading at 70 times sales or something like that. There may well be some sort of value in many of these companies that are not yet profitable, and they may well be worth waiting for in some cases if you can get them at the right price. Whether you can is much more likely now than it was 2 years ago. The more pessimistic thing is that the amount people are pulling out is a lot less because 60% of it is gone, basically.
Yeah, so it's kind of exactly the same as Cathy Wood's buys and sells. They're pulling it out at the bottom because they're panicking. This is the famous transfer of wealth